Hey everyone, welcome back to Corporate Decoder. Today we are diving into ICZOOM Group Incorporated's latest annual report packed with juicy financial details and some eye-opening risks. You might think of it as a financial checkup, but trust me, it's more like a corporate checkup with a few surprising findings. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more of these filings. Alright, let us decode ICZOOM Group Incorporated, also known as ICZOOM. They are a holding company based in the Cayman Islands, but most of their business happens in China. They are in the business of selling electronic components, and they have platforms called www.ezoom.com and www.ezoomx.com. Think of them as a big online marketplace for electronic parts that small and medium-sized businesses based in China use. They also offer services like customs, clearance, warehousing, and logistics to help these businesses out. Now, let us get to the good stuff, the financials. For the year ending the 30th of June 2025, ICZOOM Group Incorporated brought in a total revenue of $187 million US. That is an increase of about 5.1% from the previous year. But if we look back to 2023, their revenue was actually higher at $214 million. So, while they are growing, they haven't quite hit those previous peaks yet. Their main income, about 98.7% of it, comes from selling electronic components, with a tiny bit from service fees. Digging a bit deeper into their sales, the bulk of it comes from semiconductors. In 2025, semiconductor product sales made up 91.6% of their component sales, a big jump from about 70% in 2024. This is interesting because while the volume of semiconductors they sold more than doubled, the average selling price actually dropped significantly. Meanwhile, sales of equipment and tools, which had been strong in 2024, saw a huge drop in revenue in 2025. It looks like they are shifting focus more towards semiconductors, possibly due to market demand or strategic changes. Here is a number that shows how efficiently they are making money on their sales. Gross profit for 2025, it was about $6.1 million, which is a nice jump of over 23% from 2024. Importantly, their gross margin, that's the percentage of revenue left after paying for the goods sold, also improved to 3.3% in 2025, up from 2.8% in 2024. This is a positive sign, suggesting they are managing their costs better or selling products with better profit margins. They mentioned that a decrease in average third-party product purchase costs played a big role here. Now, let's look at their operating expenses. In 2025, total operating expenses were about $5.1 million, which is actually lower than in 2024 by about 18.5%. This is good news because it means they spent less on running the business compared to the previous year, even though their revenue increased. Selling expenses went down mostly because of fewer stock, based compensation expenses and lower shipping costs, while general and administrative expenses also decreased due to lower management salaries and professional fees. This efficiency in controlling expenses, coupled with higher gross profit, led to them turning a loss in 2024 into a net income in 2025. And that brings us to the bottom line, net income or loss. After a tough year in 2024 where they reported a net loss of over $2.2 million, ICZOOM bounced back in 2025, reporting a net income of nearly $1.2 million. This is a significant turnaround, showing improved financial health. The foreign currency translation adjustments, however, seem to have negatively impacted their comprehensive income quite a bit in 2025. Looking at their liquidity, their cash position improved from about $5.5 million in 2024 to over $8.3 million in 2025. This is a healthy sign, showing they have more readily available funds. A large portion of this is restricted cash, which means it is set aside for specific purposes like collateral for bank loans. Scroll short. Term bank loans, NetSquare speaking of loans, they have a significant amount of short-term bank loans, around $9.9 million as of June 2025. While they've been actively managing these loans, repaying some and taking out new ones, this level of short-term debt is something to keep an eye on. Interestingly, many of these loans are secured by personal guarantees from their controlling shareholders, which is a common practice in some markets, but highlights the personal stakes involved. Now, no corporate decoder episode would be complete without discussing the risks, and for ICZOOM, doing business in China brings a lot of them. They highlight uncertainties with the Chinese legal system, strict government control over the economy, and the potential for quick changes in policies and regulations that could impact their business. They also mention risks related to cybersecurity and data privacy laws, which are becoming increasingly important globally. A major concern they repeatedly point out is the increased oversight from Chinese regulatory bodies like the CSRC regarding overseas listings. New rules mean they might have to go through more filing procedures for future offerings, and there is uncertainty about whether they can get the necessary approvals. Failure to comply could lead to fines, restrictions, or even make their securities worthless. This is a big deal for investors, as it can significantly affect their ability to raise capital and operate smoothly. Another interesting point is their share structure. They have Class A and Class B ordinary shares. The Class B shares have 10 votes for each share, while Class A shares have only 1 vote. This dual class structure means their founders, Lai Xia and Duanrong Liu, who collectively own about 83% of the voting power, have a super control over the company. While this can lead to decisive leadership, it also means minority shareholders have very little say in how the company is run. On the market side, they acknowledge that as a company with a relatively small public float, their stock price could be very volatile. They warn that extreme price swings, unrelated to their actual performance, could make it hard for investors to gauge the real value of their shares. Given the recent regulatory hurdles and market sensitivities around Chinese companies, this volatility is definitely something for potential investors to consider. And here is a bit of a red flag. They admit their insurance coverage may be inadequate. While they have some coverage for labor and property, they don't have specific insurance for data loss or business interruptions. This means if something major happens, like a big data breach or a complete shutdown of operations, they might not be fully covered, potentially leading to substantial costs. Now, for a critical point about how they manage their finances, they've identified material weaknesses in their internal control over financial reporting. Essentially, this means their finance and accounting departments might not have enough dedicated resources to ensure financial statements are accurate and fully compliant with UCAAP. The accounting rules they follow. They are working on fixing this by hiring more qualified people and getting more training, but it's a serious issue that can impact the reliability of their financial reporting and potentially lead to fraud. So, what is the verdict on ICZOOM? On one hand, they've shown impressive improvement in turning a loss into a profit in 2025, increased their gross margin, and improved operating efficiency by controlling costs. Their business model aims to modernize a traditionally inefficient market. However, the ongoing regulatory uncertainties in China, especially concerning overseas listings, coupled with their dual-class share structure, concentrating control, and the admitted weaknesses in internal financial controls, present significant risks. Investors should also be aware of the potential for stock price volatility and the inadequate insurance coverage. Looking at the financials, the increased profitability is encouraging, but the reliance on semiconductors and the drop in equipment sales might indicate a shift in market focus that needs careful monitoring. Their ability to navigate complex Chinese regulations and their internal control improvements will be key to their future success. What do you all think about ICZOOM's comeback and their future prospects? Are they a smart investment or are the risks too high? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button. It really helps us out. Subscribe to Corporate Decoder for more breakdowns of these filings. Don't forget to join our Discord community for even more discussions. Thanks for watching, and we'll see you in the next one.